Hello, my darlings, and welcome to my channel, Zen Within Me Homes. I am here with the lovely Kathy Morris with Embrace Home Loans. She is one of the preferred lenders for Adams Homes, and she has gracefully taken time out of her day today to sit down with us and explain the process, explain the benefits, and just giving us the opportunity to get to know her a little bit better. So thank you, Kathy, so
You're
much.
welcome. Good to see you.
Yes, you too. It's always a pleasure.
Yes.
Okay, so I wrote things down so I don't forget.
Yes. Okay. Yes.
Okay, so how long have you been in the business? This grueling business.
So it's been over 40 years. Started in the managing a finance business. I've got in a training program, started in the finance business, and was closing more real estate loans than other loans. So got completely into real estate lending and worked for a lender but it's been a very long time.
So you are an expert. You know your stuff. You know your programs.
You're
know a good person to communicate
backwards.
with.
Yes, and I can help people that don't fit how to fit, and then I just know.
You can do it with your eyes closed.
Yes.
Fantastic.
Yes.
That's what they want.
Right? Exactly. You don't have to come to be perfect. We will help you get in a house.
Okay, that's what you need to hear.
Yes.
Okay. So what is your favorite part of like the whole loan process, helping these buyers get into their new home?
Making dreams come true.
Oh,
it has never changed. I can't tell you how many people that it might be their first house, it might be downsizing, it doesn't matter, but it is such an enjoyment to buy a brand new house. It's exciting and scary all at the same time, and just people are so grateful when they close on that dream home, and it just makes it all worthwhile.
Oh, I love that. Thank you so much.
Irregardless, sometimes there's challenges to get there because everybody's different, but it's just so wonderful when we get there. Yeah.
Fantastic. Okay, so you mentioned you have lots of programs, so I printed out some of the programs that you have. So you have the Approved to Move Plus. Do you want to talk a little bit about that?
Approved to Move Plus is just somebody that gets totally through underwriting. So basically everything's completely approved. It's just the collateral to get approved, which means they need to go find a house, and we just get the title work on it and the appraisal on it, and then we go to closing. So that's our Approved to Move, and a lot of sellers like it. So so we have that program where we streamline you through underwriting and get you're all set.
Oh wow, that's awesome.
Yeah.
Okay, and then you have your extended rate lock.
Yep, our extended rate lock. Now that's for the new construction. It goes up to a year.
Oh.
So now there is if you get past 90 days, there's a charge to the buyer. Mm-hmm. So most right now aren't paying for the extended rate lock because there's this big anticipation that rates will drop. So they just are waiting to see. And then I've had some customers, the house is about done and they're like playing the market. I think it's going to change, but they know more than I do. The jobs reports coming out, or this is coming out. So I think when it comes out, they'll come down a little bit. So they're locking pretty much when they want to. But if somebody wants to lock for a year out and build a new house, we have that program.
Okay, fantastic. Beyond by Embrace. It says it's perfect for self-employed borrowers or those with credit events. Can you tell us a little bit more about that?
Beyond is just something that we have programs for everyone. So most people think of, FHA, VA, USDA, all these different programs, conventional. But beyond your everyday products and programs, there are specialty programs because people come in a special way. So sometimes it's bank statements. Sometimes there's a credit hiccup where something severe happened. They were bankrupt yesterday, but they still want to buy a house. So it's beyond all those products. We have everything that anybody has. We have that product as well.
Oh, wow. Okay. Well, That's good to know.
Yep.
eSnap app. That's sounds interesting.
It is. It's our online application. I've been doing this a very long time. We had an online application when I worked at Wells Fargo, which was years ago. Mm-hmm. I worked for another company, Preg Lending. I was there 6 years before coming here. We have the best online application where it's very user-friendly. You can fill it out. Let's say you start to fill it out, someone knocks at the door, you come back a day later, it takes you right where you left off, you finish filling it out. And it's Spanish, it's English, it's very user-friendly.
Bilingual.
Yes.
Okay.
So it's very easy, and people tend to love it. So people can enter their information.
That's actually very helpful to be bilingual.
It is bilingual, and it's also people know their information instead of taking it like, oh, can you say that again? You might make errors, and people know their information. They really do enter their information accurately, so it really works out well.
Oh, that's good. Okay. Bridge loans. Tell us about bridge loans.
We have several different bridge loans, but they're basically, a bridge loan is where you have a house to sell, but you don't want to wait on it to sell. So you get a bridge, you pull an equity out of that house to go towards your new house purchase. So, and we have a few different products on that, which different investors will buy that. So, but that's what a bridge loan is. It's almost like a home equity loan tied to pulling the equity out so you can purchase your new home. So it's just that, and it's a bridge between exiting your old house and getting the new house. That's why they call it a bridge loan. So
that's actually very good.
Similar but different than a home equity.
We get a lot of people that come in and their issue is, I have a home to sell.
Yes.
And then they don't know where to go from there, because then they have to sell that home in order to buy one of our homes, and it just makes some people uncomfortable with that transition. So knowing about this bridge loan.
The bridge loan is a possibility.
Okay.
Absolutely.
Oh, that's good. Okay. Community lending products.
So community lending products, we do that right now. So community lending is products that have a reduced rate for these buyers in a certain geographic area. Right now, the community lending, Sunset Landing and Royal Highlands is not in the community lending area, so we won't really be thinking about that. But the good news is that it's USDA eligible and things like that.
Oh, okay, so that's good.
So instead of community lending, we might be doing some down payment assistance through Florida Housing, or we might be doing USDA. But the community lending through a bank like Chase, that's just not. A lot of these have maps in a certain area, and it's not in the air for that particular one. But we have other products that would make up for that gap.
Oh, okay. So where there's a will, there's a way.
There's a way. Yeah, exactly. Exactly.
I love it. Okay, so then we have here what you already mentioned: conventional, FHA, VA, USDA, jumbo, renovation loans, DSCR. Do you want to explain any of those a little further for those that aren't aware?
So you're just your typical conventional loans. I think everybody understands those. 620 and above is a credit score. On FHA, now we have different FHA products. We go down to 550, which is unusually low score for the industry. So that's a big plus that we go that low on our credit score. Another thing too is we do that. I mentioned down payment assistance. We have these down payment assistance products, but those are first time home buyer products. But sometimes people need to borrow 100%. And I have an FHA product where you can borrow 100%. And you don't have to be a first time home buyer. It's called our FHA 100. And the FHA 100, you have a first mortgage, FHA, and then a second mortgage for your 3.5% down. And so you have two mortgages, and it gets you your 100%. So you're really not coming out of pocket with anything.
Oh, so for those of you that may be interested in that, I'm going to have Kathy's information down below in the description box. So if any of these sound good to you and you want more info, you can just contact Kathy directly.
And the DSCR, that's another one that's a pretty cool product. That's it's unusual. It's really for investors buying houses, but if you're putting down money and you don't want to really prove income and asset and different things, it's really based off of the whatever the house would rent for is kind of dictates, as long as the mortgage payment doesn't exceed the actual payment of the rental. So then we can do a DSCR loan. So some people like that, especially investors. So
yeah. Okay. Let's see. What else do we have here? Oh, this was I made a printout of that 550.
The 550 credit score.
I know it's
very popular because some people have been told they can't buy a house. Don't listen. Talk to me first, because I've gotten many people into a brand new house. Forget buying a house. In a brand new house, they weren't perfect. We get it done.
See? Okay. What else do we have here? Let me go back to my notes. Okay.
I wanted to talk about Adams Homes.
Yes.
And why buy Adams Homes?
Yes.
Okay. So I have been on Adams Homes preferred lender list for 20 years. Sounds like a very long time, but you'll go back. I've been doing this forever.
More of a trusted lender to want to reach out to when looking into buying Adams Homes.
So when Adams Homes first came to Florida and they started to build, I worked for Wells Fargo. And we got on the list, and so I was there just under 15 years. So, but I stayed on the list, went to another company when I left Wells Fargo, and then I'm here at Embrace. So I've been 20 years on the preferred lenders list. So the general manager, the sales manager, both of them
That's
are
a feat. 20 years on the list.
very, very long time like
Yeah.
me. So they're like, they remember me from a long time. And they'll tell you, when I approve someone, it's like, I know what I'm doing. So there's never surprises. If I can get you approved, we go to closing. So there's no surprises. But the big thing is there's these benefits with Adams Homes. One of them is Adams Homes, since day one, 20 years ago, they paid the buyer's closing costs. So what does that mean? That means when you go to closing with Adams Homes versus any place else, you're going to closing with less cash to close because somebody has to pay the closing cost. If you're not paying them, the builder's paying them. You're going to the closing with less money out of pocket. It's such a big plus. In addition to that, the builder's been running promotions. I don't know for how long, maybe a year, maybe a little more. These promotions where they are the builders spending their money to buy down the interest rate to below market, and it is a substantial amount discount to the rate.
Right.
So how does that help you? It helps you with your payments less by hundreds of dollars less. So now you're going to the closing table with less money out of pocket, but now your payments less because of the buy down from the builder. The other thing too is the homeowner's insurance is shockingly low on a brand new house from Adams Homes. So anytime you get me a price, I can get a quote on a house, you'll just be surprised. So you add all that up, the payments less, the amount of money that you're going to closing on is less. So it's a big plus. It's just, I hate to say it just like that, but it's the best deal in town. You really can't beat the deal right now that Adams Homes has.
Right.
Yeah.
1 second, I have to close the door. Okay. I can edit that out. It's all good. That's just okay, so all right, so how does the Adams Homes incentives benefit the buyer? You just touched on that. The flex cash and paid closing costs. So you did mention the incentives and stuff that they're doing. So for example, here at Sunset Landing, this is where we are today. As you can see, we're selling out of the community. We have some homes left on Ocean Breeze Drive. Those are going to have granite countertops, extended tile flooring, and stuff like that. Shameless plug real quick while we're talking with Kathy. So the incentives that we have right now, you can get up to an additional $15K flex to buy down the rate. And then we're also on certain homes throwing in an appliance package of the refrigerator, washer, dryer, and blinds throughout, plus paid closing costs when you use the lovely Kathy or anyone you choose, because I have to be frank with that. But right now we're talking about Kathy. So that $15K to buy down the rate, can you explain to them like how that works?
So basically it's money that the builder gives you. You can use it any way you want. It's called flex money. The reason it's called flex money is because it's flexible for the buyer to use as they want. So when I say the builder pays the closing costs, there's fees that are not actually a one-time cost to buy a house, but it's even if you pay cash, they're reoccurring costs. Taxes on the house, insurance on the house, anything if it's in an HOA, those reoccur every year, even if you paid cash. Those are called prepaids.
Okay.
The builder does not pay the prepaid, so that's different. The builder doesn't pay the prepaid. There's one title charge. There's two different types of title insurance. One of them is called lender's title insurance. That is required. The builder pays it. The other is called owner's title insurance. The builder doesn't pay it because it's optional. So let's just say that, because I have a veteran who went under contract, said, I don't want to pay anything out of pocket. So what we did is we used part of the flex money to pay his prepaids, and he wanted the owner's title. So to pay that, then we took the leftover money, which was $12,000 and something, and then we bought the interest rate down as low as it would go. So then he gets to go to closing with a much lower house payment because he bought the rate down, but he took some of that money to do his prepaids because VA is 100% loan, no down payment. So he's like, I want to use that flex money for my prepaids and such. So which we can do, and then you go to closing with less that. So you can do that, or then I have the other type of buyer that's no, I want my rate as low as it'll go. Use all of that money. I'll pay my prepaids myself. So you could do it either way.
So 15,000 to buy down the rate, just like on average. I mean, I know there's more that entails it, but just like a ballpark, if I could even ask that, I don't know.
Well, it depends on the product. Is it conventional? Is it FHA? Is it VA? How big is the loan? Because it's really those dollars convert into a percent times the loan amount. So it buys it down differently according to, credit score, things like that. But it is math, and it's based off of the loan amount. So let's say somebody bought the same house, but I put a little bit more money down, that dollar would buy their rate down further than the other one because it takes the dollar amount used times the loan amount, and you get a percentage. But the rates are in the high sixes right now, and you're buying down into the low fives, maybe the mid fives, depending on the product. So it's a really big savings. It is a big savings, and it's very helpful. It turns into dollars, hundreds of dollars in savings.
Okay. And that's where you have to pay attention, like Kathy said, with the amount for the rate buy down, because I know like other builders, they'll say, oh, well, we're going to guarantee just this rate, but people will come in and say, well, what? This rate? No,
that was only on this one house here, but then the other houses.
Right.
So it's a leader to draw you in, and then it doesn't apply to what you're actually buying. So, So you got to be careful about that.
Exactly. So here it's more open and honest. This is how this works. This is how it's calculated. So like she said, it all depends. Kathy is very open and honest. So you're in good hands with Kathy.
Thank you very much.
You're welcome. Okay, so let's see. Oh, you had mentioned, I'm not sure if we covered that, home insurance and stuff like that, with a new home, how that affects the payments as well.
Yeah, so I just touched on it briefly, but it's very surprising. I've had a lot of people be like, I cannot believe how much the homeowner's insurance is cheaper on the new house.
Right.
Because they're expecting a certain amount, but it is, it's much cheaper on a brand new house. They're completely up to code, plus Adams Homes has the gable roof, which has the, that's better for insurance as well. Right. So just all around, the homeowner's insurance is cheaper on Adams Homes. And you throw that into the payment was less because of the rate buy down, the insurance. You go compare the payment to something else, you'll be surprised how much less it is.
Right.
So much more affordable. Another thing, too, is that if there's a scenario like I like this house, I just have to know I can run payments. I don't have to pull credit. I don't have to do anything. All I have to know is just what is the purchase price? What do you think you're putting down? What do you think your score is? Then I can run payments, and I can tell you this would be the payment. Here's the payment without a promotion. Here's the payment with it. Here's your savings. I can do all that. I don't have to pull credit. Just give me a little information. I can run those numbers.
And that's also very helpful because so many people, they are concerned about, well, how many times is my credit going to get run?
Yeah, it's like I'm not sure I'm real interested until I have a little more information. Right. Let me give you a little more information. Just I'll have run payments and give you an idea. Yep.
Okay. Now, for people that are concerned about getting their credit run a bunch of times, is there like a rule of thumb that they should know?
Yeah, it doesn't like somebody
or something?
Yeah, like it's not even going to affect your credit. Like if you have your credit pulled twice because someone walks in. I had my other lender, and that is one thing is that the builder's not going to pay you don't get any incentives, so you do not keep your lender if you come walking in the door pre-approved. You have to use one of the approved lenders on the list to get all of those benefits. But let's just say you had your credit pulled and you're like, but I really want this house. It's not going to change your score for another pull. It's just, it's a mortgage pull. It's not going to change it. It's when you have it pulled and pulled and pulled multiple times that it affects your score.
Okay. Is there like a sweet number of roughly how many times?
No, but in 30 days, you can have it pulled 2 or 3 times. It's not going to change it.
Oh, okay.
So, yeah.
All right. So you're fine. Within 30 days, 2 or 3 times, you're fine.
You're still good. Yeah.
Okay.
Yeah. All right.
Well, thank you so much, Kathy,
You're
for coming in.
welcome.
Like I told you before, I'm going to have her link down below in the description box. So if you have any questions, you want to get pre-approved with one of Adams Homes, she works in several areas. So it's not just with me and my partner, Mark Holmes. So anywhere in our area of Hernando, Citrus County. What other counties? Or is it just those two? Because those are two big counties anyway.
Yeah, and Marion, where Adams is. So
Marion. Okay, so if you're looking for a home in any of those areas, she is one of the preferred lenders. Her link is down below. Thank you guys so much. Make sure you give a like, a subscribe, and a follow.
Awesome. Thank you very much. 352-238-6445. That's my cell phone. Call me up. I'll answer any question.
Yes, thank you. Love you, Kathy.
You're welcome. Thanks for the invite.
Of course. Take care, everyone.
Bye.